Today is August 17th, 2025. Call this a neutral to bullish breakout attempt, but under pullback pressure structure off a long-term descending neckline break. You had a clean setup here, nice gap up, great off an inverse head and shoulder classic looking bottom. And CRNC spent much of all 2024 in a deep downtrend of finding a multi-month base in between the $7 and $9 handle, finally igniting that spark to the upside, curling in a punctured golden cross setup. And here we are. You have the 50-day moving average starting to support this breakout, churning to the upside. And we are within the beginning stages of retesting the neckline on a concealed gap downtrend price resistance level and an additional unfilled gap up above. And that gap zone where you have a setting some stops down below the 1020 handle for a 12, close to a 13% crash at the downside, targeting 1350 for that first initial target for 14% in gains, T2 for 33% in gains on a complete backfill of the gap for 63% in gains the upside if things get exceedingly bullish. You have the relative strength index pulling back to the 62 handle, near overbought, but still contains some of that bullish momentum, but definitely beginning to have that cooling process. You have both the MACD and signal line positive above its zero line threshold as the histogram is fading, showing early signs of momentum loss, but still reflecting consolidation after its overextension. So you definitely have positive momentum. You have some exhaustion invisible after first breakout attempts, but make no mistake, this is a great setup. If 1150 handle retests and holds, it could lead to $15 or plus where it needs that additional confirmation candle. But make no mistake, CRNC has finally broken out of its year-long descending trend line, a major technical event with today's or Friday's 7% crash of the downside is only a retest and not a failure just yet. This is a multi-month structural breakout, and bulls, they must defend the retest zone now. Taking you out to FOA, call it a bullish long-term breakout attempt structure, and it is off a multi-year descending trend line test with horizontal support. Pivot off the 2021 May reactionary highs and lows across that entire span of time, and here we are off the same descending and or retest zone. FOA had spent most of 2021 to 2024 in a relentless downtrend here and carving a multi-year descending resistance level each and every time it has been rejected. Amongst that key inflection point, we had that additional price rejection on a back test and finally got that breakout. This is the first major test of the trend line since the IPO initial public offering collapse to the downside. So this is a multi-year structural trend line. A break above it is rare and meaningful with a potential reset to the long-term downtrend. Momentum is real and supported by the volume here. Healthier than some of the prior false rallies, I believe that this could be the beginning stages of a rare structural breakout with a potential multi-bagger if and when it sticks. You have a nice clean stop loss down to the 23% crash to the downside, targeting T1 at the 35 handle for 29% in gains, T2 at the $40 handle for 46% in gains, and if things get exceedingly bullish, up to the $50 handle for 86% in gains of the upside. FOA is at one of the most important technical inflection points in its all-time inception and its history. And a break above a 4-year descending trend line, this start is structurally more powerful than the previous levels because of the multi-year trend line, where a technical technician would call this a career-making breakout zone.